Rick Santelli standing by at the CME in Chicago. Can't believe it, Rick. Illinois is not the best state for business?
Shocking, isn't it? So shocking. Well, maybe next year, right? All right, we are now looking at the wires. Hot numbers coming out. June CPI down 0.1% on headline, down 0.1%. That would equal where we were on May of 2020. To find a lower number, you have to go to April of 2020 when it was at its extreme of -0.8. So that is the first time we've had a minus sign there. That's actually deflation, not necessarily disinflation. Now, if you strip out the all-important food and energy, it's up 0.1, up 0.1. That's a little cooler than we were expecting. Up 0.1 would be the lightest going back to January of 21. In August of 21, you would have equaled up 0.1. Now, let's look at year over year. Year over year has been a bit lower in the past, and now it equals that level. 3%, 3%. 3% equals that low I was referencing before I saw the data, which was June of 2023. To find a smaller number, you're going to March of 21 when it was 2.6. If you look at year-over-year core, 3.3%. Our last look was 3 years, more than 3 years at the lowest level of 3.4. So 3.3 will hold that moniker. It is also the lightest level going back to April of 21. Now let's look at claims, shall we? Initial claims, 222,000. That's minus 17,000 from the revised 239,000. 222,000 is the smallest initial claims since the third week in May. And finally, on continuing claims, it is now up for above 1.8 million for the fifth consecutive week, 1,852,000, and that, of course, comps to last week when it was 1,856,000, and that would have comped back all the way to, you're going back to November of 21, November of 21. So we obviously see interest rates moving lower. That 10-year was hovering right around 4.28. It's now hovering at 4.19. It's going to be very important to see which side of 4.25 it closes at, even though it's well below that level right now. And if you look at a 2-year note, it's at 4.51. It's been holding above 4.60. We want to pay attention to that as well. We see that the pre-opening equities have zoomed up. They are now in positive territory from minus 60-ish on the Dow futures to now up over 90 points. So we see this goes a long way for potentially that September rate cut, even though many may be pointing towards July. I personally don't think that's in the cards, but one never knows. It certainly seems as though Jay Powell now has two issues that he can point to for potentially easing. Inflation getting closer to his target, but still not there. And, of course, the new wild card he pulled out, that no matter what inflation does, it's a lot lower than it was, came down a lot last year, and he's now nervous about the labor market. And we can point to the two pillars of maximum employment, stable prices, and then that outlier pillar that maybe isn't quite a pillar, moderate long-term rates.